The Federal Reserve causes the business cycle.
Say what?
You heard me correctly. The Federal Reserve causes booms and their inevitable busts.
I have never heard that before.
They set the interest rate below the free market rate.
Yeah, well, they are trying to boost the economy.
Sure, and it may look like they are successful for a while, but it is a phony recovery based on bad business decisions. Projects are begun that would not have been started if people had to pay the high rate of interest.
Why should it matter? As long as businesses are expanding, isn't that good?
The problem is this. When rates are naturally low, it is because people are saving more money. When the Federal Reserve lowers them artificially, projects are begun that are doomed to fail.
Why is that?
Because the savings are not really there. Think of the housing bubble. The Fed had lowered the interest rates to 1%.
Sure, and business boomed. Housing took off.
Yes, and then eventually people realized that there was insufficient savings present to buy all the homes that had been built. The bubble burst and prices collapsed.
I never looked at it that way. But what would have happened if there were no Federal Reserve lowering rates? Wouldn't we be in a depression?
Hardly. People would pay down debts and buy things as they needed them. They would save money for the future. It would take a few years, but eventually the savings would be there to allow businesses to expand. It would be sustainable economic growth.
Because the low rates are from real savings and not just the Fed lowering them artificially.
Yes. Real prosperity would be the result.
Fascinating. Why does no one in Congress or the media understand this?
More and more people are piecing it together every day, but there is one man who does, and has been speaking up about the Federal Reserve and all the mischief they cause for decades.
Who is that?
Ron Paul, congressman from Texas.